Hello folks, L.A. Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Well, last week was a continuation of what we've been seeing in these markets, and that is that you continue to melt to the upside. You can see it here. The primary beneficiary of the melt is the NASDAQ, the NDX, and that's because of semiconductors. But what you'll notice is that, the semiconductors doing the move, right? 11%, some sort of crazy numbers that are coming out of that group. But everything, again, is tied, other than energy, is tied to, what's going on with the semiconductors and the AI infrastructure build out, and that's true of the mega caps as well. I think that what we need to focus on is just how far can this go, because, again, if you go back and look at this, you can see that not everything is participating, and we can look at it different ways, and it's clear that not all the participation, broad participation is there. Now, the question will be is like when the semiconductors finally cool down, do we see that rotation into other places? And typically that's what happens. And so if that's the case, then of course this market will broaden at that point, and we'll see a continued advance as a result of that. Let's take a look quickly at what's happening with the actual charts. So here's the S&P 500. You can see it kind of came up, not kind of came up, just spiked higher, right? And then consolidated for 5 days, and then Friday it starts to, eke out a gain to the top side. Is it stretched? Yeah. Is it going to continue? Oh, maybe. A significant pullback? No, I don't think so. Probably not, right? It's just, it's too strong. So that's the way that looks. Let's look at the retest regen bars. Well, now, given this, pause up here and continuation, these all have become, dynamic buying opportunities, if you will, because now they're all 7 bars or more. And so any kind of retrace back into these 2 bars really should get bought. If you go over to NDX, this one didn't even pause. 3 days, 2 days, continuation. And a lot of this really has to do with what's happening in the semiconductors. Unlike on the SPX, right, the S&P 500, this one actually got a little pullback, right, a lower high, lower low, setting up an ABCD structure that takes it 28,690. Oil is helping out. It looks to me like, we had said that it probably topped back here 2 weeks back. Now we get over it, back under it, less volume. It probably, that kind of confirms this probably was the top. Maybe we get more sideways stuff. I don't think we're going to just get a plunge back down. There's lots of reasons to not expect that, but more of a drift that takes place. But again, that's supportive of equities. This supply chart, though, coming out of the oil exports through Hormuz, that's a pretty dramatic chart. I haven't seen that one before, which kind of supports the notion that we're not going to see a plunge in oil prices, but some sort of a drift. Wash is probably going to get approval now from the Senate, take over the Fed. It's really interesting to me because you've got these bullish retest regens that are just about to try and regenerate to the top side. This is the key number, 4.5. Are they going to put Wash on notice right off the bat? Kind of looks that way. So here's that SOX chart. This is an insane run, folks. This is 50% in a major index, right? In a matter of 5 weeks, 6 weeks. Crazy move. And I think a lot of this has to do with just front running. Just like back with COVID, everybody front ran what they could and couldn't buy. I think there's a lot of fear of not being able to get chips, and there's this push in the chip stocks because demand has just been through the roof due to companies worrying that they're not going to be able to buy them later. And that probably was what was going on back here in transports. I mean, this insane run in transports, right? But look what happens as a result of it. I don't know if that's what we're going to see in chips. It's a different supply and demand there versus here, but these crazy moves get crazy moves back the other way at some point. It was interesting to me that we started to see the bears on the sentiments really starting to drop finally. It's been a long time coming. That's usually a more bearish versus bullish signal. And if I look to next week, these are my expectations for ranges. This has been a tremendous move, and yeah, we can still eke out some more, but there's just more downside than there is upside risk at this point. So, trying to push into stocks at these levels, it really, at least certainly on the indexes, doesn't make a lot of sense. The risk reward is just not there. Have a great one. I'll see you next time.